A report from Hindenburg Research on Indian tycoon Gautam Adani's business empire sparked a 51 billion US dollar sell-off in shares of his group companies, pushing him 4 places down on the World Billionaire Index. The report said that the Adani Group had engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. The disclosure came just ahead of Adani Enterprises' 20,000 crore rupees open offer of shares to investors. Adani Group has rubbished the report as a malicious combination of selective misinformation, baseless and discredited allegations. However, that hasn't stopped investors from selling off. Hindenburg engages in activist short selling, which involves selling borrowed stocks in hopes of buying at a lower price later. If prices fall unexpectedly, short sellers make big gains. If the price rises instead, they would have to buy stock to cover what they have borrowed. Hindenburg, which invests its own capital, takes such bets based on its research, which looks for man-made disasters such as accounting irregularities, mismanagement, undisclosed related party transactions. Short sellers, however, aren't admired by most. Companies targeted by the activists have been pushing regulators to go after these short sellers as they may be indulging in some sort of insider trading. Supporters, however, say that the research actually uncover frauds and do more good than harm to investors.